Welcome back, everyone. Mark is here. Today I'm talking about a 10,000x growth opportunity. Let's just jump straight into it. I was looking at this recent analysis from the Bitwise executives, Matt Hougan, their CIO, and Ryan Rasmussen, their head of research. They were recently on the Milk Road podcast, and they were talking about what they called a tokenization tsunami. For my listeners who might be a bit lost, what exactly is happening here, and where on earth does this $200 trillion number come from? Yeah, so let's break it down to the basics. Right now, the entire on-chain real-world asset market, I call them RWAs in the industry, is sitting at around $20 billion, which, sounds like a lot of money in isolation, right? But in the grand scheme of global finance, it is barely a drop in the bucket. What Hougan and Rasmussen are pointing out is that the broader market is severely, almost dangerously, underestimating what happens when traditional finance finally moves its core assets on-chain. I am looking at a potential scaling from its current nascent stage of $20 billion to a staggering $200 trillion. Wow. 200 trillion with a T. That's essentially the whole global economy, isn't it? Exactly, with a massive T. And the reason I use that number is because when I look at the addressable markets primed for tokenization, the numbers are just staggering. They represent the core of all global wealth. I see global real estate, which is roughly a $250 trillion market. The bond market is sitting around $140 trillion. Global stocks are at about $110 trillion, and ETFs are somewhere around $30 trillion. If even a fraction of these traditional markets move onto blockchain infrastructure over the next decade, I easily get that 10,000x growth curve they're projecting. Okay, but let me play devil's advocate for just a second. I've seen crypto hype cycles before. Is this just, retail speculators on social media getting overly excited about a new buzzword again? Or is there actual foundational weight behind this push to tokenize everything? That is the most important question I could ask, honestly. And the definitive answer is no. This is not retail speculation. In my view, tokenization is being entirely driven by the absolute highest levels of global finance. I see institutional investors, people who manage literally trillions of dollars daily, rapidly positioning themselves for this exact future. Give me an example. Who is actually making the biggest moves here? Well, my analysis suggests the biggest signal comes from the top of the food chain. Larry Fink, BlackRock's CEO. They are the world's largest asset manager with over $10 trillion in AUM. He came out recently and explicitly stated, and I quote, "Every asset will be tokenized." That sends a massive signal to the broader market. When Larry Fink speaks, Wall Street listens. And they aren't just listening, they are actively building. Every major Wall Street firm right now is hiring dedicated tokenization teams. I'm seeing traditional infrastructure evolving right before my eyes. Coinbase has introduced stock trading. Traditional giants like the CME are building prediction markets. And there are massive regulatory tailwinds too. Both current and former regulators are predicting and actively paving the way for these tokenized markets to exist legally and safely. Okay, so the big money is clearly in. They want to tokenize all these real-world assets. But where does this actually happen? What are the digital rails for all these trillions of dollars to move around on? Right, I need a highly secure, battle-tested, widely adopted smart contract blockchain to handle that kind of volume securely. And Ethereum has essentially won that race. It has established itself as the dominant settlement layer for this transition. Just look at BlackRock again. Their new institutional BIDL fund, it's built directly on Ethereum. As real-world assets move on-chain, Ethereum is going to serve as the foundational infrastructure for modern global finance. Got it, so Ethereum is the base layer. But this brings me to the next big piece of the puzzle. Most traditional investors, or even just regular folks listening to this in their cars, they might not want to mess around with setting up crypto wallets or dealing with private keys to buy Ethereum directly. How do they get exposure to this massive RWA boom in a traditional brokerage account? And that brings me to the most fascinating part of this whole narrative, BitMine Immersion Technologies. The ticker is BMNR on the NYSE American Exchange. They are actively positioning themselves as the premier public market proxy to capture the value of this tokenization tsunami. For traditional investors seeking exposure to the RWA boom without holding digital assets directly, BMNR serves as a highly liquid, regulated bridge. Okay, a public market proxy. I've heard analysts refer to them as the MicroStrategy of Ethereum. Is that an accurate comparison? In my opinion, it's accurate. Just like MicroStrategy acts as a proxy for Bitcoin on the stock market, BMNR is doing the exact same thing for Ethereum, but with some major institutional muscle behind it. Their chairman is Tom Lee from Fundstrat, a massive, highly respected name in macro research. Plus, they are backed by heavy-hitting institutional players like ARK Invest and Pantera. They all share this exact same macro outlook presented by Bitwise. So, they are just buying up a ton of Ethereum for their corporate treasury? Oh, a ton is an understatement. BMNR has aggressively pivoted to become the world's largest public Ethereum treasury. I am talking about holding over 4.4 million ETH. Hold on, 4.4 million ETH? That is a staggering amount of capital. But wait, if they're just holding it, how does that generate value beyond just hoping the price of Ethereum goes up? Is there an actual business model here besides just being a giant digital vault? Yes, and that is exactly where the brilliance of their strategy really shines. It extends way beyond just passively holding the asset. They are actively capitalizing on the network activity that this whole RWA tokenization shift will generate. They have built this proprietary infrastructure called MAVAN, which stands for Made in America Validator Network. MAVAN. Okay, that sounds highly technical. What does MAVAN actually do? It's their staking engine. They use MAVAN to aggressively stake their millions of ETH. Here is how the math works in their favor. As that $200 trillion in traditional assets starts trading on Ethereum, the network fees are going to absolutely surge. Every transaction requires a fee. Because BMNR is helping secure and validate the network with their massive stash of staked ETH, they earn a portion of all those network fees. It translates global financial activity into massive, recurring cash flow for the company. It's a built-in yield multiplier. So if Wall Street succeeds in tokenizing everything on Ethereum, BMNR is essentially acting as a toll booth, collecting fees on the trading of traditional assets. Exactly. A highly regulated, publicly traded toll booth on the NYSE. And they aren't stopping at 4.4 million ETH either. They have an ultimate long-term goal they call the alchemy of 5%. The alchemy of 5%? What does that mean? It is a hyper-ambitious corporate plan to literally corner 5% of the total global Ethereum supply. No kidding. 5% of the entire network? Dead serious. By doing so, they are aiming to provide their stock investors with heavily leveraged, high-yield exposure to the exact network where the future of traditional finance is going to operate. If I believe Larry Fink, and I look at the $200 trillion addressable market moving on-chain, BMNR is setting themselves up perfectly. It's a fascinating setup. I have the macro thesis, the institutional backing, Ethereum as the rails, and BMNR sitting right there catching the cash flow. Incredible breakdown. Really glad to share this.